Greetings, everyone, and welcome to another edition of the Forex Technical Market Update. This is Thursday, May 21, 2015. Okay, taking a look at the euro currency, the selling that happened yesterday was eased up a bit, and the euro is up slightly on the session. But what is interesting is that the market was able to break down below support in this 111.22 area. The market broke below and actually closed below that area, but the market did not close below uh, support in the 110.70 area. Let me just get the exact level. The low is 110.64 to be exact. The market did not close below this level on the euro, and what I'm looking on is a 4-hour chart of the euro currency. If we do close below this 110.64, you can expect further losses down to 110 and down to the 109 level for the euro. And as I said on earlier this week, because the market was unable to close above this 115 swing high, the market is vulnerable for a sell-off at these levels. So the momentum on the euro currently is still down. If the market closes above this 1533 level, then the momentum will return to the bulls. If it's interesting to see that day traders, if you are a day trader, what's a good strategy is before you trade for the day, you look at these areas of support and resistance, because inevitably the market will bounce or be repelled off of these very important areas, especially in the euro. What I notice when you trade the euro is that the signals tend to be a bit cleaner and more reliable in the euro currency. Okay, taking a look at the Japanese yen, we see that the market closed down on the day, but is still below critical resistance of 122.02. And I do expect that the market will attempt to test that 122.02 level, which is here. The question is, would this be a triple top? This is top A, top B, top C, and will the market sell off from there, or will we punch through this 122 level and continue the rally? That is something we need to keep an eye out on. Looking at the pivot point numbers, we see that the weekly R3 number is at 121.66, but more importantly, the monthly R2 number is at 121.93, which is right up against the old high near this 122 level. So what we could see is that this level, if we do get a sell signal at this level, that could be a pretty good shorting opportunity for the Japanese yen. When we have monthly resistance levels combined with a previous high, if you get a sell signal on the chart, then that could be a high probability trade. And remember, when we're trading probabilities. There is nothing to say that, okay, 100% the trade will work out, but when you put the probabilities in your favor, you have a greater chance of succeeding in the markets here. Okay, so that's a trade, a potential trade coming up with the Japanese yen. Taking a look at the Canadian dollar, looking at this triangular consolidation, the market broke out of the triangle and is currently heading back up. Support is at this previous resistance. So support is in the 121.50 to 121.60 area. So the market is almost directly at support now. Well, it's at 122.07, but the market bottomed at the 121.64 support. Taking a look at the 15-minute chart, you see this is the red line area of support. The market came down to the day at S1 and then bounced. And that's why I say if you are day trading, it's good to mark these support and resistance areas in preparation for your trading day. And a common question that I am asked is which type of or which style of trading I prefer. And I think I say it a lot in these commentaries, but I prefer swing trading and trend trading. Why? Because I don't need to be staring at the screen all day. I do not want to treat trading like a day job. You know, the day job where you have to get up at a certain time and you basically clock in and then clock out at a certain time. That's not how I like to trade. I like to let the market to get on a board a potential big move and hold on to that position for a number of days, even a number of months. And I found that once I backed off of trading every day, then my profitability skyrocketed. And I know folks that I coach and that I have spoken to about trading. That's one of the things that they said led to their transformation. They backed off of the day trading. And I mean, if that's what you want to do, I mean, you must know your personality. But if you just really want to be profitable, then that is something that you definitely should consider. Okay, taking a look at the Australian dollar, the market is up slightly on the day, and we have support. Looking at this Fibonacci retracement, we have support in the 78.50 area and also the 77.77. But because the Australian dollar was up slightly on the day, we can take a look at the British pound Australian dollar. I mean, we have spoken about this market on a number of times, and the market is now rallying up to this 98.52 level. And it looks like we may be challenging this $2 level in the coming sessions. Remember, we have been speaking about this market from in the mid 190s, and or for our portfolio, we are currently long this currency pair for our members. And what we're hoping is that the market will take out this $2 level and continue to rally. Another market that is doing fairly well for us is the British pound Japanese yen. We see that we have a rally from this 175 level all the way up to 190. The market topped out today at 190.02, and the bottom of this wave was 174.88. So what you can see here is, I mean, roughly a 1,500 pip move in this currency pair. So when I speak about multiple 100 pip moves in the market, this is what I'm speaking about. And we're currently long this currency pair also, this British pound Japanese yen currency pair. Now, we're not long from the very bottom, but we definitely have a profit of a couple hundred pips in this pair. Looking at the gold market, the market seems to be settling back into this channel that we spoke about, and gold is currently in no man's land. The air for evidence as to where this market will break, I'm looking to see, okay, if the market is able to break below 1140, we could get further selling, 1140 area. Or if we're to trade above the 1320 level, then that to me will signify that gold potentially is turning around and we may be starting a new bull market in gold. Okay, another market that I want to highlight, and we spoke about it earlier this week, was the British pound, Canadian dollar, either this week or last week, and I alerted you that this is a market that it's a textbook long trade. We had a Fibonacci retracement down to the 618 retracement level, and the market is now currently rallying up to 192. I said for our portfolio that we're trading, we won't enter this position just because we're already long the British pound, Japanese yen, and also the British pound, Australian dollar. But for those of you who are just following along, I said this is a good setup to look at this British pound, Canadian dollar. Okay, now if you want the trade signals sent to your trading account automatically, you can click on the link below to sign up, so that you are not missing out on these potential trading opportunities. Thank you very much for listening, and I hope you have a good day.